Uh, right, everyone. So now we continue on the next topic: consolidation, price stabilization, company poop time. Meaning we can scalp and we can gamble. Gambling. Nah, but yeah, this isn't really gambling. I mean, it is kinda with consolidation if you trade consolidation, guys. So never really trade consolidation because it's bad for you unless you know what you're doing and you manage your risk right. Life in itself is a gamble, guys. Life in itself is a gamble. You just need to know how to do it right. You need to know how to manage your risk because if you know how to manage your risk, you're not really gambling. You're just making calculated decisions. Calculated risk. You're just taking calculated risk. All right. So we're going to talk about consolidation. Consolidation. What is consolidation exactly? Well, let's just say it's what appears usually after enough fair values has been made, after enough volatility has happened, which brings us to consolidation. And consolidation just means market being dead, market being inactive. It means that a lot of buyers and sellers have exited the market because they're satisfied with their profit or they don't want to make any more losses for the day. And it could also mean, more specifically, that the companies, the banks, and the financial institutes, those that are the big traders, have left the market. The reason why? Because it's no more company time. It's either leaving work or company poop time. So, what do we mean with company poop time? Company poop time as in lunch or poop time itself. hmm This company poop time is when most workers, most traders within these big banks that provide a lot of liquidity, they are not active, they are not working, meaning the market is not moving because there's not enough liquidity within the market. With not enough liquidity means you're just trading against other small liquidity traders and market is not moving a lot, so you have to just make do with what there is. And to make do with what there is, it's a very high risk because there's not enough information due to the little amount of buyers and sellers available within the market. And with little information, you can't really calculate the the upcoming price of the market unless we're exiting the consolidation phase and entering a new trend. Yeah, but anyhow, consolidation is still useful in its own because you can scalp trade. That's one. You can trade all of the small trades. It's very risky. You need to manage your risk well, and you need to always have your stop loss at the right position because you don't want to lose from a trade from getting liquidated, and you don't want to lose from a sudden trend that's happening after consolidation. But not only that is what it's important for, but it's also important because it basically tells you when a trend has ended, when the new trend is going to start. Like, oh, the trend has ended, we can stop trading, take your profit, take your loss, and wait for the next timeline, the next time when the market opens again, when people are gonna be active again. Yeah, that's what consolidation is useful for. hmm Not only that though, hear me out. It's important because it will tell you where price is gonna go, basically. Like, yeah, not just like where you take profit, like after you trade it and see that okay, the market's not going up further anymore. No, 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 no. I meant like it can actually tell you where price will go through its previous records. Because when there was consolidation before, because like take note of this, consolidation is usually around the time when it's company pooping time, or yeah, they're leaving work. And around these areas, you can basically assume that the next day when you're trading, market is going to consolidate at that time again, or at that range again. Because let's say market consolidates here, price goes down, price goes up, and then price consolidates here again in this range, consolidation range. I call it a consolidation range, and it exists. I don't know how to word it right, but I do know there exists a consolidation range, a range that can help you to know where you can exit the market, a range where you can know, yeah, when to exit the market, or rather, maybe when to enter. Because by knowing consolidation, what it means, you know that price won't go on the opposite side of the new trend, because it's a consolidation area there, and price usually doesn't surpass consolidation unless it's a trend that goes away from the consolidation. So let's just say consolidation here, whoop, 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 whoop. Price, if price creates a trend, like once consolidation is done, a new volatility arises, price, you can be sure that price won't go beyond this consolidation. The reason why is because the trend is going, and consolidation means market is dead. It's a dead record, a dead time range, a dead range. So if market enters here and surpasses that consolidation range, that would mean that we're creating a new trend, a new volatility, a new fair value gap, a new bias. See? See why consolidation is important? Consolidation is important because it can help you know if a trend is still ongoing or not, if you're just getting liquidated or if you're actually suffering from a loss. That is what consolidation is important for. By knowing your consolidation, you know way better if you need to stop trading. So basically, to conclude, so far, these two important techniques, these two important guides, which are fair value, which tells you where the market is headed next, if it's going up, if it's going to stabilize, or if it's going to go down. And then we have consolidation, which will tell you if a price, a bias, is at its end. Like we have fair value, which will tell you price will go maybe up, but then consolidation, which will tell you that price can no longer go higher, or that price will stop going higher and will go low, back to the fair value, or way lower. If it's an uptrend, by the way, if it's an uptrend fair value, if it's an uptrend volatility, then yeah. Yeah. So that's it for consolidation. Consolidation is important because you know where price will be headed. No, not where price will be headed. Consolidation is important because you know, yeah, where price will be headed. That's natural for every technique that I announced to you. But to be more precise, consolidation is important because it tells you when a bias is about to change, when a bias is about to start, or when a bias is about to change, or when a bias is about to end. That's what consolidation is for. Thank you.